Hello, my name is Michelle Soriano. I am the investment advisor for a pooled employer plan called Castle Rock PEP for pooled employer plan. Today, I'm recording the highlights of our third quarter review for September 30th, 2024. So let's go ahead and dig in. Here are listed the contacts for Castle Rock PEP. Slavic 401k is the pooled plan provider. Castle Rock, my firm, is the investment advisor on the plan, and Mid-Atlantic is the custodian or directed trustee. So we have a lot to cover. I'm not going to go into too much detail on each slide, and the whole deck is provided to you for review. So pooled employer plan, I know it's a new type of retirement plan. They've only been around for a few years, but it enables unrelated employers to all join the same plan. And as you can imagine, we just have the efficiency of scale then to work together. So small plans, small businesses, everybody thinks it takes a lot of money to start a plan, but it doesn't. It's simply $500 to start to join this pooled employer plan, and then just grow from there. Costs are so low and the tax credits are enormous for this, more than offsetting any costs involved. So I would definitely look into this, bundled outsourcing, all the responsibilities, and lots of benefits. So the government is providing, as I mentioned, all those tax credits. If you offer automatic enrollment, $500 tax credit for 3 years, all startup costs covered 50%, minimum of $500, maximum $5,000. And if you provide an employer contribution, the federal government is giving a tax credit for that as well. So why Castle Rock PEP? Woman-owned. I started the firm in 2006. I specialize in advising workplace retirement plans, and I'm really focused specifically on participant or employee health and wellness regarding their financial strength. So I provide individual one-on-one meetings, also complimentary financial planning software, and I want to have a little bit of fun with this. So I provide custom videos, and we have a community page we're starting to build out, and I'm really excited. I have 2 interns starting from a high school in Douglas County that specializes in entrepreneur development. So they're going to start next week, and we're really going to work on this community page. We're having live stream events and interviewing the business owners that join this pooled employer plan. And on this community page, I also want to show you that we started uploading already some of the videos, some of the educational videos that I've provided in the past regarding what's a target date fund, how much should I be saving. There's so much information that we already have that's readily available for you. Also the complimentary software program that I mentioned, scheduling a one-on-one with me. If you want just to look at whatever it is, anything with financial wellness, that could be the investments in the PEP, or it could be maybe a 529 plan for kids, or what about freezing your credit profile? Like, what is going to help you get financially strong? Maybe it's logging into the Slavic's 401k website and looking what their resources are. And they have monthly webinars too. And we're going to have a little bit more fun as time goes on about what we've learned from behavioral finance. Yep, that's me at age 70. hopefully I'll make it that long. And climbing up Castle Rock, the namesake. But we are going to actually live stream the Starlighting. That is the first event we're going to live stream. That's November 23rd. So we're going to start also having competition, whether you're attending that event in person, or attending the live stream event. We're going to have just a fun little leaderboard for folks that go through education, have meetings, attend events. So stay tuned for more information about that. I'm pretty excited. Now, looking into 2025, I know we're really wrapping up 2024 fast. So if you have a safe harbor plan already, you know it operates on a calendar year basis. So if you want to make any changes to the design of your plan, let's say you didn't have an employer contribution, you want to add one, or you want to add loans, or you want to change your eligibility to join the plan, Those changes, we want to know about them by Halloween. Also, if you don't have a retirement plan and you want to start a safe harbor plan, again, we want to know that by Halloween. So either go online if you want just the standard super simple safe harbor plan to start up. You can certainly go straight to the Slavic website, get this set up in 15 minutes. If you have got questions, you want to talk through it, schedule a pep talk with me. This is my meeting. This link it goes to right to my calendar. We can talk about what's going to work best for you and your team to attract and retain the talent that you need. And on this slide is some of the things that we think about. For example, I don't offer loans to my employees. You may want to. For me, it's more an administrative nightmare, and retirement's for retirement. But you may also want, there are different types of employer match contributions that are both safe harbor. Find out what's going to work for you. I want to have a 2-year cliff vesting. Some folks want to offer immediate vesting. So every employer chooses their own design. That's important to know, even though all the same investments are offered to every employer. So just market quick update. We had a great quarter. Third quarter was wonderful. Market returns were pretty strong. Inflation's coming down. GDP was still strong. And the Fed started cutting interest rates. So you've seen all of that and you're pretty familiar with all of this. The dark blue line on this screen is just showing you the current yield curve. It is not normal, as you can tell. So short-term interest rates are still higher than your 5-year or 7-year, 10-year. That's not normal. Normally, when you invest money longer term, you're going to get a higher yield. So it's not considered an inverted yield curve, but I call it funky. So one of the things that I'm going to be looking for in the next few months is that student loan debt. On this screen, it looks at credit delinquency rates. This light blue line, shockingly, is student loan delinquency at 0%. That doesn't quite seem right, does it? No, it doesn't. No, it's not real. I tell you, it's not real. The Department of Education has decided not to report delinquencies for student loan payments. They started, student loan payments only started about a year ago. And in that time, we know factually that some folks have been late, missed payments, defaulted, et cetera, et cetera. Those numbers are true, but not being reported. And you can see on the opposite side, look at credit card default rates really starting to skyrocket. And we still have automobile loans, some delinquencies there. So what's going to happen? Well, January 2025 is when we're going to start to first really see a clue as far as delinquencies on student loans. But up until just a couple of weeks ago, anybody who is in default or late on payments could join this Fresh Start program, which basically wiped away everything, and they could join these repayment programs based upon their income, and some of them are actually paying still nothing a month. Half of them actually, and 60% of them are paying only $50 a month. What I'm concerned about there is because it's over $1.7 trillion of student loan debt. Over 40 million Americans have student loans. The fact that they're still not paying on that is going to defer. They're still accruing interest, but they are deferring payments or purchases of a home, of a car. Having these student loans not being paid down over time is simply deferring other purchases that can be made. So it'll be interesting to see the impact of accrued interest over time with no payments. So quick investment review, looking at these reports, when you look at an investment, let's say example, Fidelity 500 index, you can see the performance. And then next to the performance, you'll see in parentheses, it's ranking in its peer group. So Fidelity 500 index is considered a large blend fund, 1-year return, 36.33% return, ranking in the 26th percentile of the large blend group. For the Vanguard funds, let's go to the Vanguard Target Retirement Funds. Vanguard Target Retirement, let's say 2025 fund. The 1-year return was 21.13, ranking in the top 24th percentile. So it's ranking better than most of its peers in the target 2025 group. And why is that important? That's important because those are the default investments. So if you join the pooled employer plan and you don't choose one of the other investments, you're going to be defaulted into a Vanguard target retirement fund based upon your age. So target retirement 2025 means you're pretty close to retiring, meaning you're going to retire in the next year or two. You can see based upon this graph, the younger you are, the more the underlying investment is going to have in stocks, domestic and international. As you get closer to my age, though, you're going to move more into bonds and less in stocks to have a more conservative risk profile. So this is still considered a moderate risk profile, but you're not going to have the same amount in equities as someone just starting off in their career. So you can see up until the age of 40, it pretty much maintains the same risk profile. And after the age of 40, that glide path continues to increase the amount of bonds, decrease the amount in stocks. And that continues through until the age of 72. So if you have questions, please schedule. There's a link here. You can schedule a meeting with me. And then we'll look into 2025. Do we want to do group meetings? Do you want to just look at the recordings? Or do you want to schedule one-on-one review of just your adoption of the pooled employer plan? And at the end of this report, you can see in the deck, we're including a lot of detail regarding standardized disclosures, investment policy statements, review of 44C, notice requirements, and just an update on those required state plans, the auto IRA plans. I live in Colorado. Colorado has one. So as an employer in Colorado, I have to either join the state's plan or offer a retirement plan like the Castle Rock PEP. And then an overview of the costs and an update on fiduciary news. So I want to thank you for your time. Thank you for listening and hope you have a wonderful rest of your day. Please feel free to contact me if you have any questions.